All right, all right, all right. Good morning, good morning. How are you guys today? Losing my voice. Gotta have some nice tea in the morning. To trade stocks, you gotta have tea. Herbal tea. Cinnamon apple. There we go. All right. We're having a banner day in our seasonal trends today. Boy, look at this. We're up $102. Rock and roll. Rock and roll. All right, let's bring that up as big as we can make it. And take a look at our seasonal trends. How are you guys today? It's good to see you. And what we're going to be doing today is we're going to be looking at the seasonal nature of markets. And then we're going to go over and look at our portfolio. We got a bunch of options in our portfolio that needs us some attention. We got to probably play with those a little bit and see if there's not something we can do here in the seasonals. I don't think there's much more to do. We're kind of sitting here on a couple of stock. Look at these. These are very low. Low, low, very low, very low, very low. Why are they in our portfolio if they're very low? Actually, this one here, this is very low, is one of the only ones making money, 164 bucks. Look, we got a loser here that was at medium. We got a loser here at medium. We got a winner there set to high probability, and then we got a loser set to high probability. I don't know. These probabilities were set like 15 days out ahead of schedule, though, so probably not the best. Let's remove that one. It's not, well, that one's making money. Let's remove this one. It's not started yet. Global payments. Let's remove that from our portfolio. So we're going to remove that selected one, and we're going to remove these two since they haven't started yet and they're listed as very low. Remove selected. Remove selected. All right, this is all we've got in our portfolio. Let's go look at the ones we've got in here. First of all, this is our pick list. And I'm going to go back. I'm going to remove all from the pick list, my pick list. We're going to go over to the neural network, and we're going to actually kick all these back out. Bye. See you, neural network. Where do we remove those? Remove selected. All right, gone. And then we'll go back out to the search and we'll start a new search. So in the month of December, 80% of the time over the last 15 years, bullish. 10, 35, nice little window of about a month's period of time, remove same. All right, search now. Boom, away we go. We're going to let that search. Oh, it's going pretty fast. So let's hold on and wait for it. All right, there we go. 270 opportunities. So we can come in here and sort those on the score. Use the score just to take the high probability ones out. Boom, 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 just like that. We're going to take those over to step 2, which is into the neural network. Wait a second, where did they go? Did we not do that? Oh, remove from step 2. We got to add those to step 2. There we go. Add to step 2, go into neural network. There they are. All right. Let's go take a look before we start working on these. Let's go ahead and let this thing work on them. All right, we're going to go do the probabilities on this. It's going to take a minute. So while that's working, we're going to come. Can we come and look at the accounting window while that does that? I don't know. That would be kind of cool if we could. It looks like we can. Oh, that's the accounting window. I didn't mean accounting window. I meant portfolio window. But is that still working? It is. I think it's still working. I think that's still working in the background. All right. So that's the accounting window. Those are all the closed out ones. So we've closed out $6,938 since we started doing the seasonal trends. We got a few losers in here. We got some nice winners. So we're up $7,000. And that's, of course, straight right off the system without doing any stops or options or anything like that. So I think we could actually trade better than that. We could, if it says a $1,900 loser, I don't think we'd have to take a $1,900 loser or a $1,600 loser. We wouldn't have to actually take that. We could use strategies to keep us from losing that kind of money, called stop orders or options. You don't have to lose that kind of money. But nonetheless, that we're going straight off of strictly the seasonal nature of the markets. We're up $7,000. So let's come back over here. Is this still going? It is. Okay, go to the portfolio. All right, now we're going to come over and take a look at some of these. Let's go look, we'll just start at the top. So the first one is on semiconductors, and that's in our portfolio. We're trading that one. We're down $256 because because we started on November 22nd. Between November 22nd and December 9th, 91% of the time over the last 23 years, this thing has returned on average 10%. Doesn't look like it's doing it this year, though. Let's go look at it and see what's wrong. All right. It says it's a high probability on. So let's pop on over to our trading platform. Take a look at on. I'm going to come over here and go to our seasonal trade miner portfolio. Oh, there it is right there. Oh my goodness, the data didn't load. I have a lot more problems getting the data to load when I'm doing YouTube than I do any other time. I don't have a problem with this unless I got my YouTube streaming going. Let's go. We got to go and reload that. So we're going to manage our local cache. I'll just delete it all. We'll load them all again. And I'm going to close that. We got to restart the software. Okay, save changes. Yes. And we're going to pop all the new software back in there. All right, we're still calculating here on the probabilities of these. Software is loading back up, loading all the data. I'm asking my computer to do too much all at once. Okay, says it's loaded. There we go. All right, so here we go. On semiconductors, just going sideways. And the reason we thought this would be a good one to sell a premium on is we thought, well, sell some premium, we'll click up some little bit of money while it runs. It ran all the way up and come all the way back down. 520 and we're down $70. How about that? I bet we were up pretty good at one point and then it's flushed all the way back down. $6,500 trade. How much money we got? We got $100,000. We got to get into the market. We got a lot of money sitting on the sidelines not doing anything. Buying power is 60,000. This would be another one. We could buy another one right in here. It's pretty close to the money. Let's come in here and sell another one. 14 days. Yeah, let's just sell one right there. Collect $520 on that one. And we'll just go ahead and wait a second. What happened? I guess we better go do some looking around a little bit. Lan, you're just getting ahead of yourself. We're going to do some puts in here. We got any volume? We do. Well, the volume's low, but the open interest, we're first thing in the morning, though. So what do you expect first thing in the morning? I think we could do another one right in here, don't you? We could do this one. We could do that one right there. Sell that one. That one's, wait a second. It's only $156? Well, that's not worth doing. 14 days out, $156. I don't know, maybe it is. Oh, it's 9.26%. That's worth doing. That's almost 10% in how long? 14 days. That's good money. Can't get 10% in 14 days down at Cache Valley Bank. All right, let's go do this. We'll just do one of them. I don't want to pick up, we're closer. I don't want to pick up a whole bunch of shares of this on semiconductors. Kind of a shitty stock. All right, let's see. Let's come over here and we'll just say 148 is where we got to go. So spread's $9. Yep. Okay, we took that one. We'll see. We'll see. That's good interest rate anyway. Okay. Let's go look at see if our scan's done. Is our scan done? It is. Oh, look at all these highs. Woohoo. Got a lot of highs in there. Now, sort them by date and see if there's many highs. Because, you know, if you go out too far out into the future, this thing can't predict. I mean, it'll look out 15 days, but that's a long time to look out into a chart and say, I know where it's going to be in 15 days. Even for the AI system, it's tough. So we like to do it right up close, like the day before. Right up close, right up close. So let's go look at where we're at. What's today's date? Today is the 6th. The 6th. The 6th. So those are the ones that are starting today. We got a high, a medium, and a low. 80% of the time over the last 20 years, this thing has returned between December 6th and January 8th, on average, 5%. That's not bad. IDEXX Laboratories, December 6th to January 21st, 81% of the time over the last 16 years between December 6th and 21st has returned 6%. And it's a medium probability. Excel, on the other hand, it says that between December 6th and December 19th, 82% of the time over the last 22 years, 14 calendar days, it's returned 2%. Well, we don't want that one. 2% is not good. Unless we sell a premium and it doesn't move very much. There is that. Of course, the reason you sell premium is to collect just in case you want the shares. Probably don't want the shares or something that only moves 2%. We could go look at it just for fun. XEL. Look at the one we don't want first. XEL. Holy smokeroonies. No wonders it's saying it's not, doesn't like it. It's already coming down off the top of a big old peak. Look at that. Wow. What a market. Maybe we do want some of this, but not right now. Look at that nice, beautiful trend line right up through there. Just like a train on rails. Got the little pullback and then another little ABC. This one here went like that. That kind of sucks. So let's go off of this one. This one just went straight up, just like, wow, look at that. Broke. What are we going to see up there? Probably a little topping formation. Could be a little head and shoulders, or it just could be a little ABC or 1, 2, 3 top formation. If it was a head and shoulders formation, what would it look like, Lan? Well, that would be your left shoulder. This would be your neckline. Go up and break a high and make a head, and have to come down, create a new neckline right up here, not break the new high with the right shoulder. The right whole shoulder would have to stay lower than the head, and then we would see it flush back to the Fibonacci sweet spot from there, right off of this low here. That would bring us back into this region here. If it made a head and shoulders formation, that's what that would be. But it's not, heck, who knows? Doesn't have to be a head and shoulders formation. It could just be a little pullback in here. It could be a little pullback like this, where we come back here, up, get a little pullback, get our Fibonacci ruler in there, low to high, comes back into the Fibonacci sweet spot, right back in here somewhere, turns around, and boom, 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 takes off and goes to the moon once again. That could be because between December 6th and December 19th, 82% of the time, that thing rises in price. But right now it says it's low because it's coming back down. It says it ain't rising in price, Land. Yeah, but maybe, well, today it's supposed to turn and start to go up again. But it says it also doesn't go up very far. 82% of the time it goes up 2%. I don't know. Anyway, that's a fun one to look at, isn't it? We could watch that one. If you were going to trade that, what would you do? Well, if I had to trade it, I'd wait. I'd wait. I put my Fibonacci ruler in there, draw a line in there, wait for it to come back into this Fibonacci sweet spot somewhere on its way down. As it started to approach, get inside of that. As soon as it got inside that Fibonacci sweet spot, I'd drop in here, boom, boom, boom. I'd come in here and I'd say 14 days out. I'd look at that one. I don't know when it's going to be there. It might not be good enough. We might have to go out 42 days out. I don't want to really go 42 days out, but that would be okay. We could go 42 days out and we may just make sure we liquidate it before about 20 days out, 20, 21 days out would be done with that one. We'd liquidate it, but we would then sell a put right in here. And oh, look, it's not going to let us sell one very close. We're going to have to sell it way down here. Oh, we're not going to trade this one anyway. Look at the options. There ain't no volume, ain't no open interest, there ain't nothing. Why are we wasting our time on this? Boom, see ya. Don't want to be ya. Okay, so there's that one. That was low anyway. Let's look at this one. We got these two to go off of. They start today. Let's go look at Abbott Laboratories. Now, Abbott, is that the one that had the problems? They're the ones that got their heinies handed to them, right? ABT, isn't it? Didn't they go? Let's go look and see. ABT. There's an ABBT. Oh, come on, man. No, it's ABT. How come? What's wrong with my system? Oh, it did the stupid data thing again. Doggone it. Let's go see the other one. I don't want to reset again. IDEXX. IDEXX. What the heck is that? IDEX Laboratories. IDEXX. ID. I thought I had an E in there. Oh, IDXX. Oh, okay. It likes this one. And that looks good. December 6th to January 21st, 81% of the time over the last 16 years, this thing's returned 6%, and it's showing medium. I really want to go see Abbott. I think Abbott is in one of these. Oh, that's AbbV. Oh, that's the one that got their hiney handed to them. That's AbbV, not Abbott. X2SA1. There we go. This thing's coming into an X2S. X2SA1. X2SA1. So we're going to watch for that. If it breaks below that low, shouldn't break below that low. I don't know. I might want to. You want to own some of this stuff right now? I kind of do. They had a bad report. They failed one of their drugs didn't pass the test, and so it flushed like that. But they're good company. You got lots of other drugs that they sell. We're all druggies. We take all their drugs like, oh, please give me more drugs, right? So who knows? This thing could come down here again. You could get a little bit better price. And just depends on where it's going to cross that little yellow dot in there. How much would an option on that thing be? We're getting a little distracted. We're outside of our wheelhouse right now. If we go 42 days and we sell a put down here, how much we collect? $141. It's only 4%. You got to put it right up there. That's 9%. That's a sweet spot right there. But we wanted to come down a couple more spots. That one or that one? I think this one. So we'll wait for it to come down there. Don't sell it right now. Wait for that market, see if it wants to touch that red line. If it touches that red line, the day it touches that red line, bam, place your order. Sell it right there. You're going to get a big old sweet smackaroonie premium. What will it be? It'll probably be around $452. That'd be a nice one. And then if you get your shares assigned to you right there, that would be a good thing. But if it turns around and takes off without you, well, you don't get your shares, but then you get $450 $450 instead of $267. And I'd rather have 400 rather than 600, wouldn't you? I think so too. So we'll wait for it to come down there and touch that red line. As soon as it touches that red line, boom, place your order. All right. So don't do it yet. Let's wait for it to come down to us. Just wait for the market to come down to you. This one here is Abbott. Yeah, this is AbbV. This is the one I thought was Abbott, and then I got over here and got distracted. So we're a little off case right now. This is ABBV. AbbV. And this is one that's the reason this one I like this one is because it's in our Richie Rich fund. This is the top 10 of our Richie Rich fund. All right. So anything that's in the Richie Rich fund, if there's an opportunity, we want to buy that one first. That's our highest, best stocks. Of course, this one here, I almost wanted to take out of the top 10, because of that flush right there, because it died so hard. But they give good dividends. We should go see what their dividends are. ABBV. ABBV. They give quarterly dividends of $1.55 a share. Now, just because it's $1.55 a share, which That's good. $1.55 a share. That kicks ass. Of course, it's quarterly, so you have to take that into consideration. And their shares are $1.75 a piece. But nonetheless, if you're going to be trading, you might as well be making money on dividends while you are trading if you hold the shares, right? So that's why we like to trade. That's kind of what made it get into the top 10. It's got high, good dividends. As opposed to you're like, well, is that good? Yeah. Let's go look at Apple. Look at that. One more time. ABBB, $1.55 per share. And they're trading at 176. So let's go AAPL just to give you a little comparison. There's their dividends, last dividends, 25 cents a share, and they're trading at $243 a share. See, that's why Apple, boom, 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 although we all love Apple, right, is not in. Oh, it is in. It's in there. I think I put it in there because I was like, I love Apple anyway, even though it has lousy shares, lousy dividends. It's a nice growth company. But that's why IBBV is in there, is because it's got such high dividends. All right. And if you're going to get assigned the shares when you sell your premium, you might as well be making dividends on it while you're getting it, right? And that's why all these are in here. Plus, they're all really good stocks. Where do I get them? I told you once before. It's the SCHD, which is the dividend. This is the top distribution, the top 10 distribution of SCHD. And that's where these all come from. So top 30 distribution of SCHD are top 10, 20, and 30. There you go. My secret weapon. That's how I pick them. And then ABBV got its hiney handed to us. So anyway, that's how you trade it. Wait for it to come back down to you. Don't execute until it gets there. But Land, what if it turns and takes off right now? Well, then you're going to miss out on $253 in premium. But if it's right there, you probably weren't going to buy the shares anyway. So whatever. Okay, let's go back to our seasonals. Seasonals. Okay, we got to go look at IDXX. Okay, and that was over here in seasonals. IDXX. Right there. Okay, we like this one because it's clear down here by the yellow bottom, right? You can see it's gone through the accumulation stage. It's crossed back over on our indicator, our chalk and money flow. Just lose connection. Are we back? Are we back? Hope you guys can see. All right, and then that's your neckline, and then we're looking for this little right shoulder down in here. Now, are we going to get the little right shoulder down in there? Nobody knows. I don't know where it's going to be. It might just keep going up and make, a little bit higher. That might be it. That might be it. A little tiny right shoulder right in here. That's all you're going to get. Maybe. Usually we get a little bit better right shoulder than that. Usually that right shoulder will come down here a little farther. Get out of there. So we'll expect it to come down and touch those yellow dots. I don't know if it will. Nobody knows. We'll have to wait and see. But if it does, we could put on an option right there. Well, it says it's going to go up from here. So it says, seasonally speaking, between December 6th and January 21st, 81% of the time, this thing rallies. Over the last 16 years, it's gone up 81% of the time, 6%. It's had some drawdowns. 2017 had a nasty drawdown. 220 is when it lost. It's been 214 it lost. But look at that one. It went way up and then came back down. This one went way up and then came back down. All right. So it's a green bar today. Let's go see 42 days. What's the options look on this thing? Oh, damn it. There's no options. Look. Nobody's trading it. Look at that. $350 spread. So unless we can't even do a covered call on it. We could buy them. $432 a share. put that in our portfolio. What do you want to do, guys? Should we buy some? Well, why don't we come in here? I want to buy 100. That's $43,000. Can't do that. Then we do a covered call. But we can't do a covered call because there's no volume. No. All we could do is just buy some shares. Let's buy 3 shares. We'll buy 3 shares. And if it falls and comes down and makes a right shoulder, we'll buy 3 more shares down there. How's that? We'll play it. Whatever. What a shitty market. Okay, let's go look again. What was the other one? Abbott. Oh, it was Abbott. And Abbott gave us bad data. I'd really like to see Abbott. ABT. Let's just go look at it over here. ABT. Well, what's the dividends on it? 55 cents a share every quarter on 115. That's not very good. Let's see. We got a nice little trend line right under here. I can't ever use this tool. It's so shitty. Little draw trend line right there. It's right at the bottom of it. We can't look up options on this either. I have no idea what this thing's going to do. Since it didn't load, let's skip it. It doesn't want to be traded. 6, let's go. The next one out is the 9th. So we're not going to take any of those 3. Oh, actually, we are, aren't we? We're taking IDX. We put like 3 shares on it. So we got to add that one. We got to put that into our move to add to pick list. So we got to move that one over. The next one is this one here, Enterprise. And that was medium. Enterprise. Well, let's do a little sorting here. That's just on the day. That's the 9. These were the 6. These were just the ones today. That's next week. So we'll just come and look at winning ratios. So now we've got in bridge, low, high, high. These two, look at these two. Oh, but they don't. The December 12th and December 19th. High. Let's look at the average profit higher too. Oh, look at these. These like to move. 5 days till calculation. That's too far out. That one's already trading. It's down $14. It's got a low, low, medium, high. There's one right there. Nokia. December 20, but that's December 20th. Yeah, but look, it's got an average profit of 10. Let's take some of these over to our pick list. So let's sort by, well, I want to sort by high probability, average profit. Average profit is high. Let's just take these real high ones all the way down to, let's go. Five's good. So we'll take all that. Look at that. Almost everything is in there. Okay, let's take these out then. Let's just do this. We'll take all these out. We'll do it over here. We won't do it in the pick list. Remove selected. Okay, so now we got everything above 5. Now let's sort by probabilities. And we're going to take out everything that hasn't been calculated. How's that? Get rid of all those. Oh, we'll get rid of lows and very lows. We got to get rid of some of these. Get rid of lows and very lows. Got to be a reason to get rid of them. So remove selected. All right, so all that we got left is mediums and highs. And now we're going to come in here and do average profits. And all the high ones, we go all the way down to, we can't do everything. Well, let's sort by date. Okay, we got, these have all passed. So these are all, look, these have all been trading. That one's down 397, extra space storage. This one's up 96, up 193, up 182, one up 88. So those are all making money, but we can't trade them now. They're past. They've already started. So let's get rid of those. Let's remove selected. And what we got left, we already looked at these two. So take those out, remove selected. And this is what we got left. All right. Any other reasons to take something out? Yeah, we could just say, well, everything that's a medium, although I don't hate to do that. Let's average profit. Let's give the AI, come over here, our pick list. We can give it all these to choose from. All those. But you know what? What is today? Today's Friday. So we're looking for what we're going to trade next week. So we should really just look between 9 and 13. That's Monday to Friday. So should we limit it by date? Okay, so 9, 10, 13, all these. That would take all these off. Boom, boom, boom. You're too far away. So your probabilities are probably not very well calculated anyway. So let's keep these because it's already, well, they're only here because of the calculation of the probabilities, and the probabilities are way out there in the future. So we're going to kick them out anyway. We're going to just take these. All right. And we're going to take these over to the add to our pick list. No, add. How do we do that? Add to pick list right there. Okay. Portfolio. There they are. Okay. So now they're over here. So this is our portfolio. Let's make this bigger. And this is our pick list. So our pick list. So now what we want to do is we could come in here and we could just say, I could be in 10 and I'm in 1, 2, 3, 4, 5, 6. I'm in 6. Do I want to get rid of any of these? That's the question. Do I really want to get rid of any of these out of our portfolio so we can add some new ones? Let's see if there's any good ones that we want to add, and then we'll decide if we want to get rid of any. We could close some out. This one here is up, and it doesn't end until it started October 25th. It ends December 11th. Wow, that's Teradyne. It's been going for a long time, and it's making 465. I think we have Teradyne, don't we? Teradyne. We do. It's right there. We sold a put on it for a rotten $125 and didn't get assigned our shares. Doggone it. Look how close we came. Well, it expires out here. We did it again. We don't ever get assigned shares. We need to self-assign. We need to start self-assigning, guys. Or we need to stop putting these things so far away and just collecting premium. We need to get some shares going. We need to start buying shares down here at these yellow lines. When this market gets down here, you need to buy the shares. You need to get assigned. We need to put these options right on top of the market so we get assigned, more likely to get assigned, and get bigger premiums that way too. Just get these small premiums. That's no fun. Then we don't get assigned. Got to get assigned. Look at how much money we'd have made if we'd have got signed right there. We'd be up $1,500 on 100 shares. But instead, no, we didn't get assigned. We're only up we're up $105. All that's left's in there, $20. Might as well just take it. Yeah, leave it on there for 14 days. Wait 14 days for $20. Well, we don't need the money. We got money coming out of our ears. We got $99,000 in cash. We got $56,000 in buying power. I guess we can just leave it in there. Might as well make an extra $20. Everyone was naysayers on Teradyne. They're like, oh, Teradyne sucks. Don't be in Teradyne. What are you in Teradyne for? I'm like, I heard this little saying somebody told me once, buy low, sell high. Teradyne's really sucking, man. It's down there so low. Why would anybody want to be getting into Teradyne? Because it's low. Okay. All right. That's what I heard. Somebody told me once, buy low, sell high. So we didn't do it though. We put our order in to buy low, but we didn't get assigned. So we get the consolation prize of a rotten $125. Oh, well, can't shake a stick at that. Better than a stick in the eye, right? So Teradyne, that ends up at $465 right now. We're going to leave that one in because that one's just making money. It goes all the way till December 11th. We'll keep that one. Delta Airlines, we're up 164. Let's go look at that one. Oh, there it is. Delta Airlines. What did we do? We sold and we sold one here. And did we sell that? We sold one there. So we sold one here, paid us 83. We're down on both of those. We're looking for it to flush. And then this helped us pay for this one. but it's not doing it. It's not flushing. That looks like it wants to go again, doesn't it? That thing is wow. Wow. That's crazy. Let's drive 1. There's your counter trend. Drive 2, counter trend. We're going into a drive 3. That is one hellacious move in that market. Man alive. That is right there. You know what that is? Oh, yes, it is. Yes, it is. It's a C1. Yeah, yeah, C1. This one right here is a B1. B1. You can type land. You'd get a B1 in there. And right here, this little break right here, this is our A1. So there's our A drive. There's our B drive. And there's our C drive. I can't believe that. That's crazy. It's going into the C drive. How high up in that C drive you think it's going to go? How many days do we have left on this? 42 days on that put. That call. That's a sold call, though. Hmm. I don't want that in there. Well, I don't know. This is saying that we think it's going to flush back down. That's what our orders are saying. But we're going into a C1 drive. It's just how far do we think that C1 is going to go? Do we want to leave those on there for now? Because if it turned and flushed for the next, pop up like that and then flush out, these would be profitable. But right now they're sitting underwater, $125. We'll leave them for now. They ain't going to hurt nothing much. Ain't going to hurt nothing much. Let's just wait that one out for a minute and see if that C1 falls through. Those are big, long drives. Yeah, that's crazy. Delta Airlines. Boy, everybody must be flying airplanes right now. Traveling. Okay, so Delta Teradyne, we already looked at. Extra Space. That one's down $397. EXR. EXR. Oh, look at that. Oh, well, it's coming down. We're supposed to be long. We're long this market. It just looks good for the short position, short side. There's our Fibonacci projection, A, B, C. That thing looks like it wants to come down and test this new low down in here. It's kind of an ugly low, isn't it? Look at that ugly bar right there. Man, that's an ugly bar. Look at this big, beautiful thing up there. Holy cow. Some of these markets have just been unbelievable. Look at that thing. Wow. How many mountains is that? Look at that. Drive 1, drive 2, drive 3. And man alive, it kept going. Even tried to make a little drive there and then come up. So that kind of little jig jog in there. Man alive. That was a crazy market. Extra space storage made 4 drives. So this was X1, 2, 3, 4. Wow. Then that was our election right there. Caused this to fly. November 8th, and it took off like that. Now it's flushing back down. We're supposed to be long on extra space right now. Between December 2nd and December 31st. Wait a second. Yeah. For the whole month, 84% of the time over the last 19 years, that thing's been bullish and returned 5%. We're down 397 though. I don't like it, but we still got 3 weeks for it to turn around and go back up. Okay, that's extra space. Morgan Stanley. And what's Morgan Stanley supposed to be doing? Losing money. 82% of the time over the last 28 years, it's returned 11% on average between November 21st and January 8th. So we got the whole month of January left. Morgan Stanley to rise in price, but it's way up there. I don't know. What did we trade it with? We're up $181 on Morgan Stanley because we sold a call up here. Oh, because we were reading the chart. We're saying, hey, we're going to go counter to the, because this thing said to buy it, right? It did. This is bullish. It said to buy it on January 8th. What did we do? We're like, no, we ain't doing that. Wait, it says to buy it on November 21st. November 21st, we came in here and said, we ain't buying that, baby. We ain't buying it. And we went short. Those are short. That's a short position. And it's fallen. We're making 181 on a counter trend. So we're actually making money. We're over here. It says it's 240. We're losing money. We're losing money in the seasonals, but we're making money in the portfolio. And how much we got left to get? There's only $15 left. We might as well just take that off. There ain't nothing left. We got everything to lose and nothing to gain. $15. And that's just going to decay away $64 against that premium. We got more money now than if we wait. Let's go ahead and liquidate that. Bye-bye. See ya. See if it'll let us market out of it. Nope. Liquidate, multi-leg. We might have to come out of it one at a time. It's not going to let us out. Let's see if it'll let us out like this. Liquidate the option. Look, it's dead. It ain't going to let us out. It says there ain't nothing left in it. Why would you liquidate it? Because market value is $64. I want that $64. I don't want to have to pay that. It says it ain't in there anyway. We're just lying to you. Won't let me out. Liquidate. What if we can liquidate? Just at least take our profits. Well, we don't have to worry about it. Liquidate option. It ain't going to let us out, guys. Oh, let us out of that one. Liquidate. Now you got to get this one out. There's no money in it. They're not going to let me out. And it says there's $64 left in it. But when I come over here to the spread, it says it's down at zero. There's nothing there. It's a $64 spread. They ain't going to let me out of it with nothing. Look at that. We're stuck in that one. We're stuck in it. Oh, well, maybe if the market will go up. We're stuck in that one. We can't get out. It says there's $47 left in it, but they're going to take that all away from us because they won't let us out. Too far out. Nothing there. Spread says $64. That's all that's in it, $64. We're stuck in that one. All right. Well, that's the way the cookie crumbles. Here we go. So Morgan Stanley, we're going to go ahead and we're stuck in it, but we're going to stay in over here in the seasonals. Let's come in here and look at this one here. This one we're making money on, CBRE. Hang tight. We're going to go put some more in here in just a second. CBRE. CBRE Group. Options on it suck. But look at it go. Draw a couple trend lines. You can at least spend the minute to do that. Okay, now it's respecting that trend line there. It's respecting that trend line there. See how many times it's hitting it? That means respect. Respect. Look at this. Just keeps hitting it, and then it went up and hit this one, hit that one, hit that one, hit that one. That's respect. So then you count how many times it does that. And we expect it to hit it 3 times, right? At least 3 times. So that's kind of 1, 2. It was kind of a flat uptrend. Just keeps going, keeps going. Where would you want to be a buyer, Land? Well, I don't want to be a buyer clear down here at the red line. I don't really want to get up at the top. I don't like to buy high and sell higher. That's never been good for me. I want to see it pull back. So that's CBR group, but we're in that one. We're up $367. We want it to continue higher because we're already in it. So that's good. ON. Oh, we're already in ON. We already did that one. We already did that one. All right, let's see what else we can add. I'm going to come in here. Now, here's the problem. I got to come in here. I got to select all these. I got to see if it'll let me do this. Problem is I select one, it puts it down there, and then I can't figure out which one it is. Well, it's going to be the one that's not trading, so I guess that's obvious. Let's see if it'll do it this way too. So we're going to come in here. I would like to be in no more than 10 at a time. I'm able to add up to 4 more. I haven't taken any of these out of here. Should we take any of them out? Close any out? No, that's all right. So we can add up 4 more. You want to take all 4 at a time? 1, 2, 3, 4. You can do that, but we're not going to. We're going to add them one at a time just to see what it does. Auto select. Okay, so I added this one. Realty income group. Oh. Now wait, before you go over there. December 31st. Wait a second. Oh, that's next week. To January 29th, 81% of the time over the last 16 years, it's returned 7% or $700. December 13th. So let's go look and see how we feel about this one. Its probability is medium. Oh. What is O? Come on, pull up the data. Realty Income Corporation. Is that Realty Income Corporation or Reality? You spell them the same way? Context land. No, English language land. Okay, here we go. How do you spell reality? Do you spell it the same way as you spell realty? Who knows? All right, come in here. This is nice. This is really nice. I want to be long here. Oh, I want to be long on this one. What does it say? Should we be long? Yeah, bullish, starting on the 13th. When's the 13th? Oh, it's a week from today. I don't want to wait a week. This market looks like it wants to go. Wait, land, be patient. No, we'll be patient in the seasonals one, but we're not going to be patient over here. Come on, baby. Let's rock and roll on this one. We're going to go 42 days. Oh, and we can do it. We got open interest spread. It's only $5. Volume's low, though. It's not very good volume. Nobody's trading with us today. Well, there's 29 and it's morning session, so let's go see. Let's buy. Let's buy. Let's buy. Reality income. Rock says reality has an extra A in it. REALITY. Oh, you got to add an I between the L and the T to get reality. Okay. Reality. So this is realty. Realty. Don't put that I in there, Lan. Okay, here we go. So let's come in and sell a put right there. Oh, that's too low. That's too high. We could sell it there, but that's, is that 42 days out? It is. Look how close 42 days is. Look at that. I want it to be at the money. Doggone it. Look at this stupid thing's right between both of them. I don't want it up there. I don't want it up there. Oh, wait. Why is there 2? That's showing the 14 as well. Sell the put. That's the 14. Why is it going? They've got the 14 up there. So this is a return on investment of 5% in the next 42 days. If we're going to put it down there, I'm going to wait. I'm going to wait for it to come down to it. But I would like it to go right at the money, but I can't. There's not a strike right at the money. We go in the money, that would be 12% return, but we're in the money already. So that means we'd get assigned for sure at that level if it stays down underneath there. But it's this purple line that we're playing against, not that one. I don't know why it's showing that one. It's the 42-day one, which is out here. 117. See, 117, 117. I don't know why it's got 1220 in there. So we could do that, but then the market would have to go up. But it says, seasonally speaking, it says it rallies. We could get a big premium, but then if we got assigned shares, they'd be assigned up here, not down here. Could do a little in the money. That'd be a 12% return. 56. We'd have to put up $5,600, but we're on margin. We haven't put up that much. We could do a couple of these, 2, 3. But I don't want to do them like that, though. I don't want to do 3 in the monies. We get $500 though, and we get shares of reality. Let's just do 1 for now, just for fun. We'll put 1 in there. Collect 197. That's 12% return. Pretty good, high likelihood that we could get assigned on this when we get the shares, which we wouldn't feel bad. We're right down here at the yellow line. We're right down here at the 200 period moving average. We're right here, broken below the red line. The only thing we got to go see, if we're going to do this, we got to go see oh, they pay dividends monthly, 26 cents a share. That's not bad. 26 cents a share on $56. That's bad. Ooh, that's not bad. That's a good dividend for a stock like this. 26 cents monthly on a stock that's only $56. Let's see. Earnings per share have gone down in 23. Sales, though, look at sales. That's good. Oh, look, November 14th, Mizuho outperformed Natural. It says that they downgraded it from 64 to 60. These guys reiterated. I don't know, reiterated. Did they reiterate an upgrade or did they reiterate a downgrade? These guys initiated, resumed, initiated, reiterated. What did they reiterate? 67 to 50. So they were bullish. They think it's going to 70, but that was on August. The last time we got a move on it was November. These guys are always slow. They never catch the reversals. They downgraded it on November 14th, but today is December. They said it was going to go down to 60. Well, that was clear back here. It did go down to 60. Went down even lower. Let's do just 1 for now. And if it'll go down, we'll do another one. Okay. We got enough volume open interest. We can do this. It's $15. We're going to mark it into it. All right. We sold 1 in the money. Let's watch it, see what it does. Okay. That's the name of the game. Where are we at? Reality. Okay. What's the next one we're going to put in here? Add auto select. The next one it put in was Ventus. So it picked Ventus. Ventus. VTR. Let's go see what VTR is. Saying bullish. I don't like that one. When does it start date? December 13th. So that's a week. In a week, this thing's supposed to start going back up. But that would make sense because this thing here, it's right there at the red line. Let's draw some trend lines from here to here. Did it respect that? Let's go turn on our laser beam. Look at that. All the way up through there. Broke right there on November 1st. Starting to come back down. Wow, that's a crazy trend line. April 16th, all the way to October 30th. That thing was respected for 1, 2, 3, 4, 5, 6, 7 months. That was a respected trend line. Isn't that crazy? How many bumps did we get? Did we get 3? More than 3. I'd say that's 1. That's got to, holy cow, what the heck is this? I'm going to say 2. Yeah, that's so ugly. Let's say 2 right there. That whole thing right there has got to be 2. Got a little one here, but that was, I would say this is 3 up to here. And then we got even a 4th attempt up to there. So tried to break that previous high up in there on a 4th drive. Drive 1, drive 2, drive 3, and it, whoa, a little drive 4 up in there. It broke it. The only reason it's a drive 4 is because it broke right there, and it actually did it. So it has to be counted as a drive 4. If it didn't break that drive 4, it would have been the ABC coming off the backside of that 3. So that was X3 right there. X3 A1S. And then that failed. That X3 A1S failed and went up, and we got an X4S. X4, which is a unicorn, A1S right there. Those are rare. We don't get those very often. Wow. Ventes. What do they do? VTR. Let's go see how they're doing fundamentally. VTR. These guys have dividends. They do 45 cents every quarter. That kind of sucks. Earnings per share. Look at that. They're not doing well. Earnings per share 2022, 2023. But look at their sales. $4.5 billion in sales. We got an upgrade here from Wells Fargo on October 1st. An upgrade on March. They like to upgrade things that are already on the run. So see how smart I am? I upgraded that. Yeah, you should have upgraded it like 3 months ago, dude. Shares outstanding. They're not buying their shares back. That's good. I mean, bad if you own the shares, but good that they're not doing it. I hate that. That's manipulation. If they start buying their shares back, that's market manipulation. That's they don't trust that their stock can go up by itself, so they have to artificially inflate their stock by buying their shares back. And that's actually a bad sign. It's a bad sign if they start buying their shares back. Oh, we're sharing our profits with our shareholders. No, you're propping up your stock so people don't bail out of it. Buying back your shares is a bad omen. They try to sell it as if it's a good thing. It's not. I'll show you something. Look at that. You want to see a bad omen? There's a bad omen right there. Who's that? That's Mr. Apple. Mr. Apple right there. See that? Look at him buying back his shares. That's a bad omen. That means they can't get their market won't rise without buying back shares. So they have to buy back shares to get the price to prop the price up. Look at their sales. Sales are dead. They haven't had good sales. 2021, we had barely squeaked out a 2022, little tiny little dot. 2023, lower than 2022. 2024, just look at that. They can't grow. They call themselves a growth stock, so they don't give you any dividends. Look at the dividends. The dividends suck, and the reason they give you sucky dividends is because they say they're growth stock. So their shares are supposed to be going, sales are supposed to be going boom, 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 and the stock's supposed to be going to the moon, right? But they're buying them back to prop up the stock. Their sales suck, and their earnings per share haven't increased for 4 years. Apple's not a good stock. This stock sucks. I mean, we all like Apple, right? I mean, we all have our little iPhones. And what else do they do that you have? Nothing. You have an iPhone. Some of you might have Apple little Macintoshes, but nobody. The financial industry doesn't even know what Macintosh is. I was in Chicago, and we had these great big massive computer labs, and there wasn't a Macintosh to be seen. They didn't even put them in there. I don't know a single trading platform that works on an Apple. Not one. I don't know one. I knew of one, but it went out of business. Nobody wants apples in the financial industry anyway. I don't know. I know they sell a lot of stuff, but I mean, what do they have? Cell phones. That's all they have. Why do we like Apple so much? I don't know. What I don't know. I've been saying this for years. I don't know why we like Apple so much. I mean, look at this. They're buying back shares every single year since 2020, buying them back all the shares. Their sales suck, flat, not making anything. Earnings per share haven't changed in 4 years. Their dividends suck. Cost of their shares, $243 with a 0.42 dividend, and it's quarterly. It's not even monthly. Look, earnings per share down, a down surprise. I don't know why we like Apple. I mean, when was the last time you bought an iPhone? It's like they don't change them. They come out with a new one every year. What did you change? Well, we made the camera a little better. Okay. I mean, they kind of got to the point where what else can they do to them, right? I don't know. I guess the next thing is that they're gonna put AI in there. They've integrated with Apple's integrated with OpenAI, and they're gonna put ChatGPT into your phone. And they also said that everybody who wants ChatGPT in your phone is gonna have to buy a new phone because the old phones aren't gonna be able to do it. So that should cause some sales. They're gonna force everybody to buy new phones. I guess that's the name of the game. Try and make some money with Apple. But I've not liked Apple for years. Been cussing at them. I want them to do better, but they don't have anything. They're one product. I don't know. Maybe they have two products. One product company, really. It's that iPhone. All right, here we go. What is this? Ventas. Now you got me off on a Apple rant and rave. I don't like companies that buy back their stock to buy back their shares to prop up their stock. I don't think but we're sharing our profits with the shareholders. That's props the stock up, makes the prop go up. Yeah. Why don't you just sell some more product and do it that way? I think that would be a better way to prop your stock up. Sell some shit. Don't just buy your shares back. Go sell something. Go innovate. Go make something. Can't just buy shares back to prop your stock up. All right, sorry. Ventez. That's my rant and rave. That's me going off on these companies that buy their shares back. And Apple's a big offender. What are we going to do here? Nothing. We're not going to do anything. What's it supposed to do? Ventez. Between December 13th and January 24th. So January 20, 81% of the time, 6% return. There's not really much to do here. We got to wait for it to come down a little bit farther anyway. We want to sell a put in here. Oh, we can't. Look at the volume. What are we even looking at this thing for? Bye. See ya. Delete ya. Don't want to be ya. Let's get it out of here. We don't want that piece of shite anyway. Where is Ventez? Bye. We don't want you in our portfolio. I'm getting sick of companies that don't have options on them. Ventez, get you out of here too. I don't want you up here either. Where'd you go? Ventez, move out. You don't have good options. I don't want to trade you. All right, let's have it pick another one, should we? Auto select. What did we do? Okay, that time it picked Dan Air Corporation, December 13th to January 9th, 81% of the time over the last 16 years. 6% return, healthcare. Oh, it's a high probability. DHR. Let's go look it up. Oh, look at that, baby. Look at the volume on the options. You rotten thing. I want to buy a sell as an option here. All right. It is what it is. It is what it is. It's got options, but they're not good ones. Okay, DHR. See ya. Remove selected. I'm not going to waste time on you. DHR. Remove selected. I should just go in and find it in our settings and take it right out. ABC DHR. DHR. What was the other one that I took out? DHR. Oh, these are A's. B, C, D, D, H. I don't want it ever in here again. Don't ever pop up in my thing. If you don't have options and you don't have good options, I don't want to see you. I can't remember what that other one was that we just deleted. All right. So we'll go back over to our portfolio. And let's have it pick another one. Which one did it pick this time? Edwards Life Sciences. EW. Let's first thing we're going to do. Just EW. Has it got any options? It says no. It's not loading. There it is. Options? No. 42 days out, no options. Buy Edwards Life Sciences. You'd been a good one too. We'd have liked to have played with you. It had a nice drop and it's gone sideways. There's no reason to anticipate that it's going to fall anymore. We'd have selling the shit out of your options if you'd have had us in here. But no options to sell. Buy Edwards. Edwards Life Sciences Corporation. EW. Remove selected. EW. Remove selected. Settings. DEW. We'll get rid of him too. EW. ED. Oh, down here. ABCD, EW. Right there. Bye. Wouldn't want to be you. Okay. Let's go back over to our portfolio and have it pick another one. Auto select. Wait. Realty. It didn't pick. What? Auto select. Oh, there it is. Edwards. Wait, we just removed Edwards. Remove selected. Where's Edwards? Edwards, remove selected. I got to remove it out of the pick list too. Okay, now you can go. All right, which one did you like there? Morgan Stanley. Well, we like Morgan Stanley. Between December 13th and January 22nd, 87% of the time over the last 30 years, Morgan Stanley has reproduced 8% return in a 40-day time frame. All right, MS. Let's go look at MS. We already got it in here. Oh, let's go into our seasonals. What did we happen here? YouTube seasonals. Oh no, I accidentally deleted our portfolio, our seasonals portfolio. That was a mistake. I hit delete here. Morgan Stanley. Morgan Stanley. Oh, look at Morgan Stanley. It says it's going to go up though. December 13th. That's next Friday, right? Look at that thing, man. Kind of got this little reset right here, and we started this little downtrend right in here, and it broke right there. So that's got to be our A1 right there. That means this is B1. That means this is C1 up here. Oh, we've already got a position on here, don't we? Quit auto scaling on me. What do we do up there? We bought a call? What? Who would buy a call up there? What the heck? Oh, this is back to more. Oh, that's the one we can't get rid of. Who would buy a call up there? You did, Lan. That was part of a strategy we couldn't get out of. All right, so we're looking for C1 right here. So this is B1 right here, and this is A1 right there. So that's our A drive. Draw your trend line in there. Okay, so up like that. Let's use the laser beam. We like green lasers. Still haven't got a new battery for my green laser. Extend line. Look at that. So that's first mountain, our first drive, drive 1, just like that. Here's drive 2, like that, back down in here. So that means we're going to anticipate a drive 3. Is it going to happen or is it going to break at drive 2? Go off the Fibonacci ruler from here to here, and it comes down to here. Of course, it wouldn't come straight down. It'd probably make a little ABC pattern, right? It'd probably come down if it's going to break it, come down, test it, go up, stay, and then come out down in here. But this is saying that we should see that third drive, that C drive. So delete all arrows, delete this. What's it going to do? Nobody knows. Probabilities tell us it's going to get a C drive. So we should anticipate buyers being a buyer right in here next week, though. But we could come in right now and we could sell 42 days out. Let's see what 14 days out is. If we sold a put right here, right at the money, that'd be give us $220. That'd be 6% return. What if we sold that right there? That'd be a 5% return. That's good money. 5% in 14 days. That's good money. $176. You want to do more than one? We could do two. But really venture out. We got $56,000. We got to get into the market. What if it comes down here, land? What if it does flush? What if it comes down like that? Well, then we'd end up buying some shares right there, wouldn't we? And we'd be underwater. But then we could sell some calls against them and just wait for it to turn around and go back up again. Wouldn't suffer too much. Depends on how far back it's going to go. Just depends on whether we think we're going to get a C drive. Okay. All right, we just collected $344. We're rocking and rolling today. Let's do auto select one more time. What did we get this time? It's like opening up a Christmas present. Raymond James Financial, December 13th to January 8th. 81% of the time over the last 16 years, we get a 5% return. Let's go see RJF. RJF. Oh, look at that baby. That thing says it's supposed to continue into December 13th from January 8th. December 13th, January 8th. So that's another 26 days. Oh, but look at the last 2 years. The last 2 years have been flat. Can you see that? You can't see that. Here, I'll move myself. Look at that. Last 2 years. Baby Ray James. Here we go. Let's go look at it a little closer. What do we want to do here? Wow, that I don't really want to be a buyer way up there. Take that. Let's do our laser beam here. We got an extension going on here. Boom! Look at that. Didn't respect that, baby. Let's go one more time to there. Nope. Wow. Up to here. I don't know. That's a crazy. We go from here to here. This is where's everybody drawing their trend lines. Where's everybody going to put their support levels? They're down there at the red line, obviously. That's those two down there. Man, alive, that thing gone. This thing come down like this off of this peak. And so that right there, I'm going to call this right here A1. Not, well, we could call it, that's, I almost want to call that clear down there A1, don't you? But this was still in a downtrend. It broke it going this way. Let's put it right here for now. Can always move it. Can always move it. We're going to call that A1. Well, we need a little help here. Bring in the bulls and bears. Yeah, that's a fourth drive. Well, it's only if we count that one. I think we're 1, 2, 3, just right there. A1. Okay. So we're going to come in here. This is B1. And then, oh, look, that's definitely a C1 right there. B, C1 right there. It is definitely in a C drive. So A1, this is B1. This is C1 right here. So we're at the top of the C drive. So that right there, my friends, is X3S A1. You are holding a king and a jack right there. That is a king and a jack. That's a good hand. Yes, sirree. King and a jack. What do you want to do if you got a king and a jack? You want to hold? That says that thing should come down and make a little ABC top formation. It should come down, probably test some of these trend lines. Just broke that first one. Try to go back up, not break a new high, and then flush. Let's say that it does this, and then flush all the way down into here. And so that's where we want to be a buyer right here. Let's draw our Fibonacci ruler in there. Oh my gosh, it's way back here. Holy smokeroonies. I don't know if we can get it back into there. Raymond James Financial. Let's go look at this thing. RJF. This is a crazy stock. RJF. They buying back their shares first thing. Yes, they are. Well, that sucks. But look at their sales. Whoa. And their earnings per share. Whoa. And look at their dividends. Whoa. $1. How much are they a share? $164. Whoa. But they are quarterly. They're not monthly. 45 cents. Yeah. 1.1%. 45 cents on a $164. Yeah, that's decent. That's pretty good. But they're buying back their shares. That's what's propping up that these guys upgraded on October 9th. JMP Securities. That's not JPM, that's JMP. They said their price target was 146. Where did it go to? Wow, it went to 170. And they had a price target of 146. Huh. Raymond James. What a market. The only bad thing is they're buying back their shares. But they don't need to. Why in the heck are you buying back your shares? Maybe they truly do. I don't know. I don't ever think these guys are altruistic. Do you? Do you trust a big corporation to be altruistic? No, they're self-serving. Why are they selling back their shares then? Sells in billions. Look at that. What a market. What do they do? Raymond James Financial or Financial Management, Asset Management Company. Is there any short interest on this thing? Ooh, short interest is rising. No, it's not. That's not bad. Wow, what a company. You guys know anything about these guys? Latest filings. December 5th, filing for proposed sale of securities under Rule 144. Statement of change in beneficial ownership of securities. Statement of change in beneficial ownership of securities. Filing for proposal sale of securities. They don't have anything that looks fun to read. Wow. Raymond James Financial. We got to learn more about this company. Come on, guys. Let's go see Chat GPT. What can you tell me about Raymond James Financial? RJF. Raymond James Financial is a diversified financial services company offering investments and financial planning, investment banking, and asset management services. Founded in 1962 and headquartered in St. Petersburg, Florida, is given a significant player in the financial industry. As of December 6, 2024, stock price is 164, reflecting a slight decrease from the previous close. Over the past year, the stock has appreciated approximately 48%, up 100. In the fiscal fourth quarter ending September, Raymond James reported record net revenue of $3.46 billion and net income available to common shares. The company is undergoing a leadership transition with CFO Paul Shar set to become CEO on February 20th, 2025, succeeding Paul Riley, who will transition to the role of executive chair. Raymond James continues to demonstrate strong financial performance and strategic reinforcing financial services industry. Wow. Do they offer their own funds to trade, or do they simply manage money in other funds? Raymond James has both property and proprietary funds and asset management services utilizing external funds. Proprietary funds through its subsidiary, Raymond James Investment Management, formerly Tower Advisors. The firm provides a range of mutual funds and investment strategies managed in boutique investment managers such as Eagle Asset Management. These proprietary funds are available in clients seeking tailored investment solutions. How about that? That's quite a company. Raymond James Financial. Now that kind of say it a few times, I've heard this name before. I've heard these guys. Kirk says Zero also has monthly dividends. O has monthly dividends. Are they good? I just saw your note, Kirk. Oh, we got to go look at dividends are over here. Oh, do have monthly dividends, 26 cents. Oh, wow. 26 cents on 56. That's a good one. That is good, Kirk. Nice call. So the dividends are 5.58%. That'd be a good one to trade. That would be a nice one. What were the on the realty? What were the options like though? Can't remember. Oh, got good options on it too. Oh yeah, we're happy with this one. We want to get assigned on this one. This wouldn't be bad. We want to trade this one. This was a good find. Good find, Kurt. Let's see. Let's go over. So Raymond James is a good find too. But the problem with it is that I don't know what the heck we're gonna. Oh, look at the volume on the options. I'm so disappointed in you, Raymond James. Look, we can't trade options on it. We're gonna have to self-assign on this one. I like this. Well, then we can't sell covered calls. You're just gonna have to trade it. I like this company too much to not trade it. I don't know. That's just because of the last 6 months. What's it been doing before that? Pretty good. Pretty good. It's just, man, it's had a killer 6 months. All right, Raymond James. We're going to have to I'm going to keep it. I'm going to keep it, and we're going to trade it with shares. We're going to trade it with shares. We're going to have to self-assign on it. We just can't sell covered calls against it. That's no fun. All right, what have we got? How many more can we do? Let's auto-select one more. Which one did it give us? Teradyne. We've already got Teradyne. October 25th. Wait a second. How come it's low? Oh, that's not what it gave us. Realty. Oh, it gave us, no, Morgan Stanley. I hate that I can't tell which one it's given me. Raymond James. Wait. Oh, Manulife. Manulife. MFC. Let's go. Hold on. December 13th, January 9th, 81% of the time over the last 16 years, 6% return. It's another financial company. Manulife. MFC. shares, options. Look at this rotten thing. But it's another one. Look how beautiful that is. It's only $32 a share, too. We're going to, oh my gosh. Options suck on it. Let's go look at calls. In track and trade, in trade miner, I come in here to the settings and I got real high octane. It's supposed to be, I put in here that it had to be trade options and they're all optionable. Yes, they're optionable. But hey, wait, there's one that says no. Oh, that's not selected. So I put that I wanted it to be optionable. And yes, they sell options, but their options suck. Look at this thing. That was a beautiful uptrend right there. Got a counter trend in here. Another beautiful little uptrend in here. Where's this thing going to connect? Oh, it's connecting right there. Laser beam. Oh, let's see. Across the top, we got this thing coming into a flat top up in here. That's a solid wedge. But we can't. We're gonna have to self-assign on this one too, but we can't trade options against it. Doggone it. Where'd you buy it, Lan? Well, I'd wait for it to pull back to that red line, back in Fibonacci sweet spot somewhere, right? Down in here. We'll be buyers if it comes back down into this region here. This is a full reset right there, so that's got to be our A1 right here. A1. This, well, I'm going to call this B1 right here. Grab that B1. That's B1. There's our little right there. That means this is, man, flat. So that came in like that. That means we got to run, we're going to run one from here to here. I don't know if that'll do us any good. That's out here. So we might get a break and see this thing break that trend line. If it breaks that trend line, that's probably the next support level it'll come down to. It's got that line from this B, and this one here is our C1 right here. So this is C1. C1 right there. So we're in the top of the C drive. I'm not real thrilled to go any higher, but I would like to see it come back down into this region here. Give me the opportunity to buy some more. Yeah, we'll see. Not real thrilled about it, but it's in our portfolio. Should we just leave it there? Okay, let's go auto select one more. Oh, we can't do any more. That's it. Either we got to take that one out. Manual life. We got to either take that baby out because it's got no options on it and put one more in, or we can just leave it. And it's pretty high. It's on the C drive, December 13th. I don't know. That would have to be a rebound drive. It's not going to be a trend. It's going to be a counter trend. Let's remove that. Last 2 years haven't been good on that one either. Remove selected. By MFC, we're going to take you out. MFC, remove selected. We'll leave it into our system, though. We won't go take it out of our settings, just in case it gets pulled up again sometime. All right, let's choose one more. Auto select one more. Another Charles Schwab. Another financial. We've got CNC up here. This is Centene. It's leaving behind in Honeywell. It's leaving behind. But it picked this one here, SCHW. SCHW. Wow, look at that thing. These financial markets are going crazy. Going crazy. Let's draw some trend lines. From here to here, laser beam. Green laser. There's another one. I don't know, that one isn't quite. We'll have to maybe adjust that one, but right now it's showing right here. So that's the RA drive. So we're going to call this A1. This one here is B1. And I don't know. Looks like it's trying to go into a C1. Let's turn on the bulls and bears and find out. Chart overlay, bulls and bears. Oh, bulls and bears is no, it's not agreeing with us. It's saying that's A1 right there, Lan. You're doing it wrong. That's B1. And this is C1 up here. So yeah, we're in a C1 for sure. Bulls and bears. You just turn on bulls and bears. You can find it out better. There you go. A1, B1, C1. We're going into a C1 drive. Charles Schwab long. Let's go see if we want to buy Charles long. What time does he say to go in? December 13th. So not till next Friday. A week from today. Supposed to be bullish a week from today. Means it could languish a little. I don't know. Or it could take off early. I don't know. That's a C1 right there. Should we go see if it does dividends? SCHW. Charles Schwabaruni. Quarterly. 25 cents. Nope. They suck. They don't want to share their income with us. How are they on sales? Oh my gosh, look at their sales. And they're not really buying back their shares. They don't need to. Earnings per share went down from 350 to 254. What are they right now this year? Earning per share. Where is it? Earnings per share. PE ratio 32. 253. 254. 256 right now. Trailing 12 months. Okay, so 2023 they were 254 and right now they're 256. So the past year they're 384, but we want TTM. We want trailing 12 months. Well, we could say this year, this year alone, 2024 year for next year is going to be 384 is the estimate. And right now they were last year as 254 and they were 350 in 2022 and they're projecting to be this year 384. Trailing 12 months is 256, which is still higher than 2023. Quarter, we don't care. Next year, they're anticipating 22.85% growth next year. That doesn't tell us where's sales? Sales right here. Sales past 5 years, sales quarter. I want that number, 25. I want 2023. Sales surprise 1.33. So their sales are growing. I don't see where it shows the number though. Sales. Oh, there it is, right there. 2564, 25. So their sales are 2564. So they're beating last year again, not by much, 2552. Still got a month to go. Okay, well, look at this. Everybody's downgrading them. Nobody likes them. Piper Sandler says you guys suck. As of July, they were wrong. Back in July, Piper Sandler. That didn't age well. Same thing with TD Cohen. These guys here called it Kiefer and CD Cohen. Wait, this CD Cohen said downgrade. Oh, that was March. Upgrade him. Then they downgraded him in July, which is just the opposite of what actually happened. Those guys screwed up. September, Wells Fargo reinitiated. Equal weight, $70. Downgraded it. Said it was going to go down to 64. What did it go to? Went to 82. Those guys were wrong. That's funny. They said from here it was going to go down all the way to 62. They didn't know. All right. Well, that's proof right there that even the big boys are wrong oftentimes. Even the big boys don't know what the hell they're doing half the time. They're just throwing darts at the wall just like the rest of us. All right. There you go. There's a nice little Charles Schwab. What are we going to do? C1. Let's just go in and, I mean, if it goes into a C drive, we could buy some. If it flushes, if we sold a put right here, we'd be pretty bullish on that thing. That would be 9% return. That's anticipating. That's if it pulls back. We're not looking for it to pull back. We're looking for it to rally. You could buy a call, but if we bought a call, it would have to really rally. It'd have to go hard, and it might not go hard. It might just go slow up through there. That's a third drive. It's the C1. I mean, it's a pair of twos, right? You're sitting at the blackjack table. You got a pair of twos. Are you going to play your pair of twos? You could. How big of a bet are you going to put on a pair of twos? That's what that is. This is your 17 right here. And this one right here, that's a pair of aces. But it's a king and a jack right there. Problem is you don't know you got a king and a jack until after the fact, oftentimes on A1. B1, though, that's the one you know you got a 17. This one here, pair of twos. We'll just do one. Okay, we just received $300. Now the market's got to run, because if it flushes right here, we'll be in trouble. We don't want it to flush. We want it to break that C1 and go. It's not very good odds, but it is the C1. It's not a C2 or a C3. If it's a C2 or C3, we wouldn't do this. But since it's a C1, we'll give it a shot. Pair of twos, that's all we got. And it says over here that it should go, should rally. All right, we got none left. That's it. That's our game. That's the game plan, guys. We'll wait and see what these do. There's nothing to do, really. Most of these don't start till next Friday. Let's see how our sort goes. Do we have anything start dates? We got December 2nd. Next one is December 13th. Yeah, these don't all, none of them start till next Friday. We got a whole week. We could probably take them all out, throw them all away next week, and start over again next Friday and see what we come up with, because none of these start until next Friday. They start next Friday. But that's what it looks like. All right, guys, that's it. Hey, Tabor Quigley, I know that guy. He looks familiar to me. It's my nephew. Good to see you, Tabor. We're just playing with the seasonal nature of markets today. All right, guys, that's it. We are done for the day. I got a Sunday school lesson for you. Don't forget our Sunday school lesson. Trading is a game of strategy and wit, where you must think several moves ahead to outwit your opponent, who's doing the same to outwit you. All right. Trading is a game, and both players are all out there trying to take each other's money. Remember, for every winner, there's a loser. For every loser, there's a winner. 80%, 20%. 20% of the people in the markets make all the money. 80% lose their money. Don't be that guy who's one of the 20%, one of the 80%ers. We want to be one of the 20%ers. Okay, there we go. Be careful. Stay happy. And hit the thumbs up. Give me the little thumbs up. Give me the little like if you had fun today, if you thought this was interesting anyway. I know options sometimes are, seasonals are a little bit grindy. You have to sit there and kind of grind through them and see what opportunities are out there and see if there's not something we want to add to our real money portfolios. But for now, we're just kind of watching some of these markets and doing a little technical analysis so you can learn how to do it yourselves when you find markets you want to look at. And that's how you do it. All right, guys, we will catch you next time.